Hey there, welcome back to the channel. Thanks for checking this video out once again. Andrew Fleur from truecondos.com, and on this video I want to do something a little bit different. Give you a little bit of a market update, what's happening in the economy in general, what's happening in the real estate markets in particular in Toronto and in also Calgary, where many of our clients are focused on investing these days, and what's ahead, what's looking ahead for Calgary in particular, what's going to be happening this year and beyond. So yeah, let's jump right in. I'm going to just go through some articles and things that I find interesting and just talk about them, and I hope you enjoy this video. So first of all, I thought it would be great to start out not with something that's happening in today's news, but actually rewinding the clock back. If you can see here, I don't know if you can see that date, January 19th, 2022. So 1 year ago from today, what were people saying? What were the experts saying about what was going to happen in the economy? And obviously the biggest thing that people are asking me about and real estate investors are interested in talking about right now, of course, is mortgage rates, interest rates, and what's happening there and what can we expect to come. But looking back a year ago, I just find it really interesting how wrong every single expert was, myself included. I did not think that the Bank of Canada would do what they did. And here we are. So a year ago, Scotiabank, they were the most aggressive in calling for rate hikes around this time last year. So around this time last year, everybody, was starting to say, okay, yeah, interest rates been very low for very long, starting to see signs of inflation creeping in here. The whole COVID thing is kind of over now. So they started to predict rate increases for 2022. Scotiabank was the most aggressive on this and the most hawkish, you could say, on the rate hikes. They were calling for rate hikes of 2% to quell inflation. I believe they're calling for 6 or 7 rate hikes, each rate hike being 25 basis points. They were calling for 6 or 7 of those this year, in the year of 2022, at the beginning of the year. And pretty much everybody across the board said, you guys are nuts, you're crazy, myself included. I'll admit it, I was completely wrong. And I think, 99.9% of you watching this video were probably also thinking the same thing or similar. There's no way, after years and years and years of basically very low interest rates and just really 20 years of interest rates slowly coming down, there's no way that they're suddenly going to go up that much in a single year. Why? Why did we say that? Why do we believe that so strongly? Well, many reasons, but one of the reasons was it's never been done before, right? I mean, just look at the historical precedent. Interest rates just don't jump up that quickly, that dramatically in such a short period of time. So everybody was like, yeah, you know what? Interest rates, yeah, we can all agree they're probably going to go up a bit this year as the Bank of Canada looks to fight off some of this inflation that we're starting to see, and just can't keep interest rates at zero forever. We need to start bumping them up a bit. But what actually happened, of course, was far, far greater than even the most wildest prediction. So again, just a very interesting time in the markets and the economy in general, when the most aggressive prediction was about 6 or 7 rate hikes, and the reality now, as we sit today, was I believe 17 now. We just had another one. We're up to 17 rate hikes in 1 year, each rate hike being 25 basis points. Of course, many of those rate hikes we got were a bunch of those all happening at one time, which is, again, very unusual. So nothing like this has ever been done before in history. Nobody could have saw this coming. Nobody did see this coming. Even the most aggressive expert forecasts were way, way off. So that's just interesting to look back and see where we are today. So jumping into today's headlines, here's an article from the Star. Mortgage rates will likely peak this week, economists say, and could start declining by the end of the year. So again, this being the top of mind, most investors want to talk about. Is this headline correct? I mean, it sounds great. Reality is nobody knows. We have no idea. And that's the biggest learning that I've learned. This is the biggest thing that I've learned from the last year, is that nobody knows. We're in just very uncharted waters, strange economic times. Everything that's happened over the past few years, we don't know. We take it as we go as real estate investors to assess the situation as it is in front of us. Obviously, we all hope that rates will come down. We hope that things will start to normalize a bit and get back to a more manageable level. But reality is we have no idea if this headline is going to be proven correct or not. Rates could go even higher for all we know. But in terms of what the Bank of Canada is saying lately, most recently, they seem to be indicating, yes, that they are now likely going to start to pause on any rate hikes, and potentially at some point in time, they will start to bring those rates back down. In terms of the markets are pricing in rate decreases, I believe, sometime in the second half of this year. But again, you talk to 5 different economists, experts, there are going to be 5 different opinions. Nobody believes anything's going to really happen significantly, certainly in the next 6 to 9 months. But we hope that this headline is prescient and does become true as real estate investors. But reality is we just don't know. My theme for 2023 as a real estate investor, like probably most of you watching this video, is I'm calling it 2023 is really the year of just hold on. Just hold on, okay? It's, again, very challenging times for us as real estate investors, as anybody with a mortgage, anybody with debt, anybody who has borrowed any money whatsoever, in any way or fashion, is a tough time right now. And so that's just the reality of it. And the main piece of advice I have for many of my clients right now is looking at 2023 and dealing with these challenges is just hold on. Do everything you can to hold on to the properties that you have, to pay your bills, to get through it. And we hope that better times will be ahead. But we don't believe strongly that there's going to be a dramatic shift in these rates that we're paying in the short term, call it. That being said, I do believe that we will probably see some moderate improvements in the mortgage rates as we head into the spring market. Why do I believe that? Well, again, might be correct, might not be, but looking at historically, what always happens every year in the spring market is when that heavy activity of real estate activity starts kicking in, banks start to compete for your business, and mortgages go on sale, as they do every year in the spring market. So some bank comes out with some aggressive headline and grabs all the news headlines of, we've seen it so many times in the past of, 2.99% mortgage, 1.99% mortgage. I believe a couple of years ago it was 0.99% was the headline. So this year, maybe it's 3.99. I don't know. Right now the best you can get on a fixed is around high 4s kind of thing. So we'll see where things go here. But just something to keep in mind if you need to get a mortgage, or if you have a mortgage up for renewal. Spring market is usually when the banks are most competitive and they're fighting with each other to get your business. So just keep that in mind, as in January, February, not a great time to get a mortgage. Almost always I find the rates are going to be cheaper in the spring than they are this time of year, just from competition. Okay, next article. Repaying debt is Canadians' #1 financial priority as inflation, rising interest rates, and recessionary fears top the list of the economic worries for 2023. So this is a CIBC poll. Nice uplifting headline there. But yeah, I would agree, paying down your debt. So when rates are so high, this is a good year. If you are in the fortunate position of having extra capital, having extra cash, this is that year, 2023, to start paying down some of those debts that you have, whether it be paying off mortgages, getting ahead of payments. Certainly if you have any credit card debt, other kinds of debt like bad debts, you certainly want to look at getting rid of those in a year like this. But again, if you're like most people and you don't have a ton of cash just sitting extra lying around, 2023, it's the year to just hold on, do everything you can to get through it. Next article here, I want to get into population. So a lot of talk, a lot of numbers coming at us lately about the massive and historical population growth. So we've got a lot of headwinds on us as real estate investors and in the real estate markets, and certainly across most of Canada, the real estate markets have not been doing well at all for for the last number of months. But we also have this, this lurking lion in the background of immigration, and we know that the government is targeting higher and higher and higher immigration targets, all-time highs. And so here's, again, more data just coming out in the third quarter. Canada's population increased 362,000 people in one quarter. I found this interesting. It says this recent 3-month growth of over 362,000 people is a similar level of growth that Canada used to see in an entire year about 1 decade ago. For example, in the entire year 2011, Canada's population grew by 350,000 people. So again, this is a major theme that's going to be propelling us forward and going to present opportunities and challenges for us as a country and certainly as real estate investors in the years ahead. Right now, we're in the mud. We're in the thick of it. We're dealing with high interest rates, and it's a bit of a mess overall. But the long-term prospects of where real estate prices, rental prices are going in this country, it's pretty clear if this continues. You don't have to be a rocket scientist to see what is going to happen in the medium and long term here if we continue to stay on this policy and trajectory of record all-time high rates of immigration. I was on a Zoom call with Benjamin Tal of CIBC this week, and he said that, I believe it was the number he said, it was 965,000 new Canadians in the last year. 965,000, almost a million new Canadians from immigration, international students. He listed a few different categories there, but almost a million people. So we, 5-10 years ago, we talked about immigration, like this says, 300,000 to 400,000 people a year. That was kind of the number we had in our head. And about, 30% of those in the GT coming to the GTA, around 100,000 people a year. We're talking a million people have come to Canada. A lot of that backlog from COVID and nobody coming for a couple years, but still, just absolute wave, huge wave of immigration and population growth in Canada. On that note, I want to get into the rental market and look at this headline here that just came out. CMHC just came out with their latest report. Immigration difficulty purchasing put rental vacancy rate at the lowest level since 2001. So vacancy rate of residential properties, according to CMHC, across Canada as a national whole is the lowest that it has been since 2001. So again, I like to talk about things in terms of a pendulum. That's just a visual that I always use and talk about with my clients. Maybe this is helpful for you. So I picture the real estate markets and the economy as, a series of just pendulums that swing back and forth, right? And you can picture when a pendulum, it swings very, very fast to one side and reaches a certain point, it gets too high, it has no choice, but gravity begins to pull it down and go back the other side. So when you raise interest rates really high, it makes it very hard for people to buy real estate. And then so what happens? Well, then it's, buy versus rent. It swings back, and now it's swung back so far in favor of the rental market. The rental market has been absolutely on fire. That has been, in some sense, a bit of a saving grace for us as real estate investors as we're paying all these higher debt payments. We are seeing much higher and higher rents. Even now, this time of year, where typically the rental market is extremely slow, typically rental rates are going down this time of year in the winter. Anecdotally, there's a lot of pockets out there and investors experiencing higher than expected rental rates, even renting out at this time of year. So, and here's another one from CMHC, again, showing us that the vacancy rate across the country is all-time low. So, you pendulum, it just goes back and forth, right? So when renting becomes way too expensive, the renters turn and say, well, why am I paying all this money in rent? I might as well just put that money towards buying. And it goes back to buying, and now buying is so expensive, so it's going back to renting. The pendulum goes back and forth. Same thing for different markets. So Toronto became very expensive. I talked about this so much over the past couple of years with you. And so naturally, the pendulum has swung back to more affordable cities like Calgary, and we're going to get into that obviously here. Here's a little tweet that went viral. I don't know if you can see this, but here's this picture of a whole huge crowd of people outside of a house. What are they doing? These are students lining up to try to rent a house in Guelph, Ontario, and apparently it's $1,000 per room to rent this house for students in Guelph, Ontario. So again, just anecdotally, the stories are coming in across the board of things like this rental market just absolutely on fire. In particular, the boom in international students. So if you have any rental properties near universities, or certainly if you're in downtown Toronto, a big reason for the rental strength and rental boom are international students. And we expect that trend. I expect that trend to continue to grow as universities. This international students in particular are really the cash cow that's keeping these universities going and paying larger and larger shares of their bills. So, just a very interesting time indeed in the rental markets. Another article here from RBC. Proof point, is Canada becoming a nation of renters, right? So we're starting to hear a lot of this talk again, and goes through different stats and talking, we've heard this a lot before, where Canadians and North Americans, we're obsessed with home ownership versus you go to other parts of the world where renting is more the norm and few people own and most people rent. It's the opposite here. So will Canada, are we destined to become more like that European model where greater and greater share of the population are renters and smaller portion are buying just from sheer economics of it? I don't know. We'll see. But it's interesting that, these kinds of trends and themes are now being brought up and talked about in the mainstream media and with economists. So let's jump over to Calgary now and jump into the market that most of our clients are excited about and investing in for many good reasons, and what's happening there in Calgary. So obviously, very different story if you've been tracking along with me over the past number of months. Calgary versus Toronto, tale of two cities, very, very different. Really, Calgary versus any other city in Canada. Calgary has been the lone star amongst a lot of bombs across the country. The real estate markets are getting thrashed, but Calgary is not. Calgary's been doing great, so we're going to get into that. Population growth keeps Calgary housing market on the boil. Alberta rental market has strong upside potential in 2023. So again, population and particularly migration to Calgary from other parts of the country, combined with, yes, Calgary, Alberta is receiving those huge numbers of international immigrants like we are everywhere in Canada. But the big thing that Calgary is getting that Ontario is not is people moving from within Canada to the city. So here's another one. Alberta is a popular place. On a net basis, Alberta gained the most interprovincial migrants from Ontario in the third quarter of 2022. So check this chart out here. Net interprovincial migration, Alberta, going back 2011 till now. And you can see obviously the huge shooting up like a rocket. You've heard the rumors. People are buzzing. It's true. Everybody is moving to Alberta. It is actually reality. We've been talking about Alberta and promoting it for its benefits for about 3 years now. So if you've been tracking along with me, this is not news to you. But if you're newer here to True Condos, to this channel, to me, receiving my emails and so on, you might be shocked to see what's happening here in Alberta. Again, what happened in Alberta 2015 to 2019 was essentially recession in Alberta. Oil prices collapsed. And from about 2020 onwards, things have been looking better and better and better in Alberta. The recovery is happening. And in particular, people are flooding into Alberta from other parts of the country. This is a little visual I want to show you. Where is everybody coming from? Where is everybody coming from that's moving to Alberta? The latest stats here, you can see very clearly that the largest share of where people are coming from is Ontario, Number 1 by far, and number 2 is BC. So again, this is something we saw and predicted, and sort of the pendulum idea back in 2019 when we first looked at Calgary. We said, Toronto is becoming very expensive, and more people every day won't be able to afford to buy Toronto, versus Calgary is cheap, but as Toronto goes higher and higher, Calgary, relatively speaking, becomes even cheaper and cheaper, even more and more attractive, which will inevitably, that pendulum idea, gravity will kick in, and the pendulum will have to swing back this way. You can't have these two things in the same swimming pool, the swimming pool of Canada. We're all in the same water. You can't have two things floating completely different rates, like that. So I'm mixing all kinds of metaphors here, but hopefully you get the idea that, what goes down must come up. And Calgary was down for so many years, and now Calgary is coming up. We saw it coming up before any of these interest rates hikes and stuff started to happen, but it's now becoming a lot more pronounced as Calgary has come up. But now the rest of the country is sinking. But Calgary, interestingly, is holding strong and is doing very, very well. While the rest of the country, real estate-wise, is sinking. So this whole campaign, Alberta is Calling, is this website that the Alberta government has put out, and this ad campaign, and I've talked about it. You've probably seen the ads around Toronto, heard the ads on the radio and so on. It's actually working. It's actually working. Here's this beautiful website with all these classic Alberta scenes there. Alberta is Calling, and Ontario and BC in particular have answered, and people are flocking to the province right now, and to the city of Calgary in particular. So kudos to them. It has worked, but again, whether they did that campaign or not, I think it was bound to happen, as we've said for years. So here's another one. Calgary leads Canada's large metros in economic output. GDP per capita in Calgary is number 1. So another big thing that we keep reminding investors about is, yes, Calgary is cheap compared to Toronto, but it's backed by a strong economy and by jobs that pay really well. And there's much more disposable income available in Calgary with much cheaper real estate than Toronto. So again, it's a perfect recipe for future growth here. Nominal GDP per resident, right there at the top, of course, of Canada, is Calgary, Alberta. Toronto is no slouch itself, but Toronto, the mega city with all the wealth and millionaires and billionaires that we have here, and celebrities and so on, little Calgary has us beat. I'm sorry to say, guys, and it's another great sign for Calgary moving forward. The economic indicators are all looking good. How's Calgary? How's the real estate market right now? I've alluded to this, but here's a visual again to show you. Prices in the different cities across Canada today, early 2023, or I should say December 2022, most recent data here, compared to a year before. So unfortunately, as I said, you notice everything is below the bar except one. Calgary prices up 8.1%. Everybody else is down significantly. So look at some of the worst ones are some of these outlier cities that saw huge booms during COVID as people moved out of the city into smaller areas. Hamilton, Kitchener, London, these guys got hammered the most. But look at Toronto here. Toronto is down 8.9 again versus Calgary is up 8.1. What is that? 9 plus, it's basically 17%. Calgary has outperformed Toronto by 17%. If you put $1 in Calgary a year ago versus if you put $1 in Toronto, all things, equal across the board averages wise, you'd be 17% better in Calgary if you had done Calgary versus if you had, done Toronto. So that is, that's a good snapshot and summary of how's Calgary, how's Toronto. This chart is very, very telling. Here's another one, Globe and Mail. Home sales prices expected to fall in 2023 as Canadians struggle with rising borrowing costs, Korea says. So wanted to touch on some of the predictions as we're at the beginning of 2023. The predictions are coming out from RE/MAX and Korea and a lot of these big organizations that always look at and give indicators and predictions of the markets ahead. So basically, Korea has come out and said that basically Korea is predicting prices are going to go down overall in 2023. But what's interesting is look at Alberta. They don't have it broken down by city, but if you look at Alberta, this is last year, 2022, 2023, 2024. So 3-year kind of predictions, looking back, looking now, looking forward. And Alberta, they are predicting will grow each year in price. Not by very much, but still growing. Versus if you look at, say, Ontario, they're predicting a huge drop off from 931,000 way down to 850 and then up slightly in 2024 to 860. But dramatic change in Ontario and most of Canada is what Korea is predicting versus Alberta. Again, most of these forecasts are very, very similar. They're saying Alberta is going to grow. Everybody else is going to not, unfortunately, is going to shrink. Price is going to go down. On that note, here's one from Calgary, the Calgary Herald. Strong economy will drive Calgary housing market to new sales heights. RE/MAX Canada. So this is the RE/MAX Canada forecast for 2023. And again, they're basically saying the same thing. It's Alberta's time to shine, says Elton Nash, Executive Vice President of RE/MAX Canada. So, again, you can check this article out if you want, but basically, same story as kind of Korea. Alberta, going to do well. Rest of the country is going to be hurting pretty bad. So if you're interested in investing, where should you invest right now in 2023? Well, it's a challenging time, as I said, but obviously our belief still remains that Calgary is the place to invest in 2023, is the best option, all things being equal, at some point in time. And you will hear from me on this in 2023, I predict, as prices come down in the GTA in particular, and as prices readjust to market realities, the opportunities in the GTA that we haven't seen in a number of years will come back. We will be back in Toronto. We will bring you investment opportunities in Toronto. It's going to happen. I personally will once again start investing in Toronto, but that moment hasn't happened yet. Okay, so we're still waiting for the markets to adjust. We're still waiting for certain signals, and maybe I'll make another video about that, about things that I'm looking for and things that I'm watching in terms of when is it time to start investing back again in Toronto. But for now, Calgary is certainly the safest and best place to invest if you're looking to invest in Canada in 2023. Wanted to share this with you as well. Again, just for perspective, this is something that I find helpful and useful just visually and as I think about, what is the potential moving forward? So this year is a bit of a mess everywhere. Might be a bit of a mess for a while here in these markets until we get these interest rates under control. But long term, thinking about everything that we talked about in this video so far with immigration and everything that's happening in the wider economy, where is a good place to be for the next decade? Okay, as real estate investors, you always got to think long term. The longer term that you're able to think and project and visualize and plan for as a real estate investor, the better. The more that you fall into the trap of trying to be a short-term investor and looking at quick turnarounds and getting rich quick and money in, money out kind of thing, the more danger that you're going to put yourself in. And that certainly is proving true right now for anybody, especially in the GTA, who bought something maybe a year ago, 2 years ago, who are now really under a tremendous amount of pressure. But anybody who bought something 10 years ago is probably not worried at all, right? So the longer that you're in the market, the greater confidence and strength that you have and position that you have as a real estate investor. And you always want to be thinking of the properties that you acquire. These are properties that you can hold for the long term. I always say 5 years is a base minimum. You don't want to buy anything ever if you are not prepared to hold it for at least 5 years. But ideally, you want to stretch that out as you get more mature as an investor and start thinking longer and longer. And really, you want to get to the point where you never sell anything as an investor. I love the expression, real estate is for buying, not for selling. I love that. So think about that. But anyways, jumping to this. So Calgary versus Toronto, looking back 10 years to today and looking forward 10 years and thinking, where's a good place to invest for the next 10 years, right? Today, 2022, let's look back to what was life like in 2012, and then let's think forward to life in 2032. That's what I'm trying to do with this chart. So Calgary, you can see price in 2012, 380, price right now, last month, 506, only 33% higher. You might say, oh man, that's not too exciting. Well, again, you got to remember there was a massive recession in that decade for about 5 years, right? And again, that's why we like to invest here. It's because it's a buying opportunity in Calgary. While the market has been pounded by this 5-year recession, they haven't got out of it yet, right? They started to, and now everything's happened in the last year. Look at Toronto, 479, 2012. Oh, that's quite a bit higher than it was in Calgary, but look at the difference in 2022. So even with prices as they've come down quite a bit in Toronto, they're still up more than double, 125% higher than they were 10 years ago, right? Well, you might say as an investor, wow, that was great. I want that. Give me that again, right? Of course. But you got to ask yourself, you can't look back as an investor. You got to look only forward and look at what's reality today. And you got to say, okay, moving forward 10 years, thinking of myself in 10 years time, 20 to 32, what will my future self wish they had have invested in? Only you can answer that question, and only you know what's right for you. But as I look at this as an investor, what I think about is which market has the potential to double in the next 10 years? Which one is more likely to double? Is Toronto more likely to go from 1.1 to 2.2? Or is Calgary more likely to go from 506 to $1 million in the next 10 years? And again, thinking about that pendulum idea, I feel like there's just a strong case to be made that Calgary, with all the immigration and everything that's coming into this country, with all the economic strength that Calgary is showing now and the recovery that it's undergoing, and just the foundation that it has of strong incomes all throughout, even during the hard times. Calgary, to me, has that gravity, that potential on its side that, we don't know what's going to happen. It's impossible to predict, but that's how I see it. Is Calgary has the great potential to outperform Toronto over the next 10 years. Does that mean I'm not going to invest in Toronto? I'm only going to invest in Calgary? No. I'm going to continue to invest in both cities, but overall, broad strokes, thematically wise, when you're looking at the next 10 years, I think the future of Calgary as a market, based on where they are today and based on how that compares to every other city in Canada, I still see tremendous amount of potential for growth in this market. And so wanted to share this additional visual with you. So here is the Toronto price in the blue, and here is the Calgary price, again, over that same last 10-year period. And look at Toronto, even though it's come down dramatically over the last number of months, it's still so much further ahead in terms of overall price point compared to Calgary. And Calgary, while it has improved a little bit, quite a bit from where it was in the lows of that recessionary period, the room for growth here. Look at the potential room for growth for Calgary in the next decade ahead. Could Toronto double again, and could Calgary stay the same price? Absolutely. It could happen. Anything is possible. We simply don't know what's going to happen. But if you look at the fundamentals and you look at the economic factors and strength of each economies relative to their real estate prices, Layered onto that, the massive amount of immigration that's going to be coming to this country and population growth that's going to be coming to this country. Everybody's got to live somewhere. And I think a greater and greater proportion and share of those new Canadians and existing Canadians within Canada who are in these expensive cities like Toronto and Vancouver will more and more increasingly choose cities like Calgary in particular to live in because they're just dramatically more affordable while still giving you an amazing quality of life in a major city. Okay, there you have it. I hope you found this video useful. I hope you got some value from it. If you did, I wouldn't mind if you would share this video with somebody that you know who could also value from it. If you're on YouTube, if you don't mind hitting the like button to tell YouTube that you like this video and other people like you will see this video a little bit better. And if you don't mind subscribing as well, that'd be great. Until next time, happy investing. If you want to talk to me or somebody on my team about your options for investing in 2023, we'd love to hear from you. We'd love to have a free consultation with you. You can call us anytime, 647-371-0110. Andrew at truecondos.com is my email. Until next time, happy investing.